Finally, one more thought on inflation and the blame game. For almost 2 decades now, the headline inflation rate in the United States averaged at or below 2%. That lull broken in a big way by a pandemic, by supply chain disruptions, and by fiscal stimulus that turbocharged consumer spending. Effects that the Fed at the time deemed transitory.
We've had several months of high inflation that most economists, including me, believe will be transitory.
By the time the Fed began to raise rates last year to curb inflation, the CPI index was on its way to 9%. Deemed transitory benched, and the narrative shifted to the labor market and to employee compensation. As businesses were forced to pay workers more, the legend goes, companies passed those costs on to consumers, a wage growth spiral.
There's still a lot of work to do when it comes to wages and getting them down to a tolerable pace of growth that meets the Fed target.
But a funny thing happened on the way to the forum. What if rather than wages being a large driver of inflation, inflation was driving wages? It's not just semantics. A recent analysis by San Francisco Fed economist Adam Shapiro argued that the high correlation between wages and inflation doesn't actually equate to causation. In fact, his research found that when you look at a key CPI measure, less than 5% of the run-up in that measure could be explained by employment costs alone. Former Fed Chair Ben Bernanke last month co-authored a paper that also poked holes in the wage spiral theory, saying that while the strength of aggregate demand led to a tightening of the labor market, the tighter labor market didn't create much inflation. The data backs that up, and eventually so too did Jay Powell.
I do not think that wages are the principal driver of inflation. I think there are many things. I think wages and prices tend to move together, and it's very hard to say what's causing what.
So what is to blame? Housing, used cars, fiscal stimulus, or is it Beyoncé? Oh yeah, Beyoncé. Economists over at Danske Bank in Europe, doing yeoman's work I should add, say they found that a recent resurgence in inflation in Sweden overlapped with the kickoff of Beyoncé's Renaissance World Tour at the Friends Arena in Stockholm. It was a 2-night appearance, and that 2-night appearance contributed to a large increase in hotels, airfare, and other recreation prices. Now, to be fair, the Beyoncé effect is likely to be truly transitory, but the tour, it does land this weekend in the Netherlands, and the CPI data for that country set to be released a couple weeks later. I'm just saying.